In the last video, we talked about how Forex started from gold to modern currencies, but that was just the beginning, because what Forex has become today is something completely different. Today, this market moves more than $7 trillion every single day. Think about that for a second. 7 trillion in just one day. And yet, most people who enter this market have no idea how it actually works. They just see profits, they see people making money, and they jump in. But without understanding the system, this market will destroy you. So in this video, I'm going to explain how Forex actually works today, step by step, in the simplest way possible. After the gold standard was removed in 1971, everything changed. Before that, currencies were fixed. Their value didn't move freely because they were backed by gold. But once that system ended, currencies started floating. Which means their values started changing based on demand and supply. And this created something new, the market where prices move constantly. A market where traders can buy and sell currencies to make profit. This is the Forex market we know today, a decentralized system where no single person controls everything, but big players controls most of the movement. Now, let's break this down. How Forex actually works. In Forex, you never trade a single currency. You always trade currencies in pair, because every transaction involves two sides. When you buy one currency, you are automatically selling another. For example, Euro USD. This pair represents the value of Euro compared to the US dollar. If the Euro becomes stronger, the price of Euro USD goes up. If the dollar becomes stronger, the price goes down. And this movement is where traders make money. Now, understand this carefully. You don't need big movements to make profit. Even small changes in price can create opportunities. That's why traders focus on timing, not just direction. But here's the real question. What actually moves the price? Because the prices don't change randomly. Every movement in the market has a reason behind it, and the reason is demand and supply. If more people are buying, the price goes up. If more people are selling, the price goes down. But what creates this demand? There are many factors. Economic news, interest rates, inflation, global events, all of these things affects the value of currency. For example, when the country's economy becomes stronger, its currencies become stronger, and when that happens, the price of currency pair changes. This is how the market reacts. It's not random, it's structured. And once you understand this, trading becomes much clearer. Now, here's something most beginners don't realize. The Forex market is not controlled by small traders. It's controlled by big players. Banks, institutions, hedge funds, and governments. These are the players who move the market. They have the money, the data, the power to influence price. Retail traders simply follow the movement. And this is where most people fail, because they try to trade without understanding who they are trading against. And when you don't understand that, you are always at a disadvantage. And this brings us to the most important part. Forex is not just about strategy, it's about discipline. Because even if you understand everything, if you don't control yourself, you will still lose. Most traders fail not because of the markets, but because of their own behavior. They overtrade, they panic, they chase losses, and they don't follow rules. And in this market, discipline is everything. Without it, nothing works. If you really want to succeed in Forex, don't start with trading. Start with understanding. Learn how the market works, build discipline, and then choose the right platform. That's why serious traders choose XtremeMarkets. Subscribe to our YouTube channel.